If you get a state pension, pension credit, attendance allowance, PIP, or any other DWP payment, let me ask you something. How often do you actually read every letter that comes through your door from the Department for Work and Pensions? For many people, the answer is probably not very often. Sometimes those envelopes stay unopened for days. Sometimes they get mixed in with junk mail. Sometimes they're placed on the kitchen table with the intention of reading them later, and later never comes. But in August 2026, ignoring just one letter, or misunderstanding just one rule, could cost you hundreds, or even thousands of pounds over the coming year. That's why today we're carefully going through every major DWP change affecting pensioners this month. Some of these changes are good news. Some require action. Others simply require awareness so you don't accidentally lose money that should have stayed in your pocket. And I especially want you to stay with me for the next few minutes because one of these changes has surprised thousands of pensioners across the UK already. Many people don't even realise they're affected until they check their pension age online. So grab a cup of tea, settle in, and let's continue. Now, let's spend a little more time talking about the state pension age change because this is easily one of the biggest retirement developments the UK has seen in years. Many viewers hear headlines like, "The pension age is going up," and immediately panic. Some think they have to work another year overnight. Others believe they'll lose money they've already earned. Thankfully, that's not how the system works. This change has actually been planned for many years. The government announced long ago that increasing life expectancy meant the state pension age would gradually rise from 66 to 67. The important word here is gradually. Not everyone suddenly wakes up in August and discovers they have another year to work. Instead, the increase depends entirely on your date of birth. If you're already receiving your state pension today, this change doesn't suddenly stop your payments. Nothing changes for current pension recipients. Your pension continues exactly as before. But if you're approaching retirement, perhaps you're 62, 63, 64, or even 65 years old, this is something you absolutely need to check now rather than later. Imagine spending years planning your retirement around turning 66. You've worked out your savings. You've planned when you'll leave work. You've even discussed it with your family. Then suddenly you discover your pension won't begin until several months, or even a full year, later. That gap could significantly affect your finances if you weren't prepared. That's why the government encourages everyone approaching retirement to check their personal state pension age rather than relying on general assumptions. Your exact birthday matters. Even someone born just a few weeks before or after another person could have a different pension date. And this is where many people make expensive mistakes. They assume. They hear something from a neighbor. They read something on social media. They see a newspaper headline. But none of those sources know your individual circumstances. Only your personal state pension record can tell you exactly when you're eligible. So if you haven't checked recently, this month is a perfect opportunity. It only takes a few minutes and could save you from months of confusion later. Now let's move to something much more immediate. Your actual payment dates. This is one area where August catches people out almost every single year. Here's why. Most of us become used to receiving our payments on roughly the same day every month. Eventually it becomes part of our routine. Bills are arranged around it. Shopping is planned around it. Direct debits leave shortly afterwards. Everything runs smoothly. But August introduces something that quietly changes that routine. The summer bank holiday. Now, hearing your payment is arriving early probably sounds like good news. And in many ways, it is. Nobody complains about receiving money sooner. But there's another side to the story that many people forget. The money still has to last exactly the same amount of time. Imagine receiving your payment 3 days earlier than usual. At first, it feels like extra money has arrived. Maybe you're tempted to treat yourself. Maybe you think you've got a little more breathing room. But your next payment hasn't moved forward. It still arrives on its normal schedule. That means your budget now has to stretch across a longer gap. It's a very common budgeting trap. Financial advisors often warn pensioners about this every time there's a bank holiday because people naturally spend according to when money arrives, not according to how long it needs to last. If your payment normally arrives on Monday the 31st of August in England, Wales, or Northern Ireland, you'll instead receive it on Friday the 28th. That means you're responsible for making those funds last until your next scheduled payment. It's exactly the same amount of money. It's simply arriving earlier. Nothing more. Nothing less. And if you live in Scotland, remember your August bank holiday falls much earlier in the month, so your payment schedule may differ from someone living elsewhere in the UK. That's why it's always worth checking your personal payment date instead of assuming everyone receives theirs on the same day. Now, speaking of letters arriving through your door, let's talk about something that deserves immediate attention if you're still receiving disability living allowance. Many people don't realize that DLA is gradually disappearing for working-age adults. Over recent years, thousands of claimants have already been moved across to Personal Independence Payment, commonly known as PIP. But the process isn't finished yet. During August 2026, more people are expected to receive letters asking them to begin that transition. And here's the important thing. Receiving the letter doesn't automatically mean you've done anything wrong. It doesn't necessarily mean your benefit will stop. It doesn't mean the DWP believes you no longer qualify. In many cases, it's simply part of the nationwide reassessment process. However, ignoring the letter can become a serious problem. If you're asked to complete forms, provide medical information, or attend an assessment, those deadlines matter. Missing them could delay payments or even cause benefits to stop until your claim is reviewed again. That's why opening every DWP letter promptly is more important this month than ever. Even if paperwork feels overwhelming. Even if you find forms stressful. Even if you've completed similar forms before. Don't leave them sitting unopened. If you struggle with paperwork, ask a trusted family member, friend, or local advice service for help. The sooner you respond, the smoother the process usually becomes. And remember, many people successfully move through reassessments every year. Preparation makes all the difference. The next change is particularly relevant if you've been planning a holiday. Maybe you are finally taking that trip to Spain. Perhaps you're visiting children or grandchildren overseas. Or maybe you're simply enjoying retirement by traveling more than you could while working. Travel is wonderful. But when you're receiving PIP, there are rules you need to understand before you leave the UK. We'll explain exactly what those rules mean, why longer trips can affect your payments, and one simple mistake that catches many pensioners every summer. Now let's look more closely at those travel rules because every summer there are people who unintentionally create problems with their benefits simply because they didn't know the regulations beforehand. Many pensioners assume that if they're entitled to personal independence payment, they can travel wherever they like for as long as they want without informing anyone. But PIP is designed for people who normally live in the UK, and the DWP has rules covering how long you can be outside the country while continuing to receive the benefit. This doesn't mean you can't enjoy a holiday. It certainly doesn't mean you have to cancel your travel plans. What it does mean is that if you're planning to spend an extended period abroad, perhaps visiting family overseas for several weeks or enjoying a lengthy holiday, you should check the latest guidance before you leave. The reason is simple. Depending on your circumstances and the length of your trip, being outside the UK for too long could affect your entitlement. Imagine returning home expecting your normal payment only to discover it's been suspended because the DWP wasn't informed about your extended absence. That's a situation nobody wants to face. The safest approach is always to understand the rules before traveling rather than trying to sort everything out afterwards. A quick phone call or a visit to gov.uk can provide reassurance and help avoid unnecessary stress later. Now, let's move on to what many viewers have been waiting for. One of the most valuable changes in today's video. This is where real money could potentially be available, but only if you know it exists. Have you ever cared for someone? Perhaps it's your husband, your wife, a disabled adult child, A brother or sister. Or maybe an elderly parent. Millions of people across Britain quietly provide care every single day without thinking of themselves as carers. They simply see it as helping someone they love. But the benefits system often recognizes that caring role. And if you're receiving pension credit, there could be an additional payment available through what's known as the Carers Addition. This extra support is designed for people who have caring responsibilities while also qualifying for pension credit. For some households, this additional amount can be worth up to around £2,503 each year. Think about that for a moment. That's not a one-off payment. It's ongoing support that could make a meaningful difference to household finances. Perhaps it covers rising heating bills during winter. Maybe it pays for food shopping each month. Or perhaps it simply provides peace of mind knowing there's a little extra available for unexpected expenses. Even more interesting is something many people don't know. If both members of a couple qualify under the rules, both may receive this additional amount, depending on their individual circumstances. That's one reason why it's so important not to assume you've already received everything you're entitled to. Benefit rules can be surprisingly complex. Sometimes people qualify without realizing it. Other times they qualified years ago but never claimed because nobody told them. There's another detail worth mentioning here as well. If your carer's allowance comes to an end, the additional pension credit support doesn't always stop immediately. Under current guidance, there can be an 8-week run-on period before that extra amount ends. That temporary continuation gives families valuable breathing space while adjusting to changing circumstances. Again, this highlights why understanding benefit rules can be just as valuable as receiving the payments themselves. Knowing your rights often protects your income. Now here's something that should concern every pensioner watching. Recent figures suggest that pension credit remains one of the most underclaimed benefits in the entire country. Thousands upon thousands of eligible pensioners simply never apply. Why? Usually because they believe they won't qualify. Many assume their savings are too high. Others think their pension income automatically excludes them. Some believe owning their home means they aren't eligible. And many never check at all. But assumptions can be expensive. Very expensive. Because pension credit isn't just about receiving an extra weekly payment. It can unlock an entire package of additional support. Depending on your circumstances, qualifying may open the door to help with council tax, NHS costs, housing support, and other forms of assistance that many households desperately need. The DWP estimates that the average annual value of pension credit is worth thousands of pounds. That's why advisors repeatedly encourage pensioners to check eligibility even if they think they'll be refused. The application costs nothing. The check usually takes only a short time. And if it turns out you're eligible, the financial impact could be significant. Ask yourself this. If someone told you there might be thousands of pounds available to your household every year, wouldn't you spend 10 minutes checking? Most people would. And that's exactly why this change deserves attention. Now let's talk about another development quietly affecting thousands of benefit claimants across the country. The move away from legacy benefits continues. This process has been happening gradually for several years, so many viewers may already know someone who has experienced it. Older benefits are steadily being replaced as people move onto universal credit or other modern benefit systems where appropriate. For some households, that transition has already happened. For others, it hasn't. But if you're still receiving one of the remaining legacy benefits, August could be the month when an important letter finally arrives. And if it does, please don't ignore it. The letter isn't junk mail. It isn't optional reading. It explains what action you need to take and, most importantly, the deadline for doing it. Missing that deadline could interrupt your payments until the transfer process is completed. That's why many welfare advisors recommend opening every DWP envelope as soon as it arrives rather than leaving it unopened for weeks. It may feel like just another government letter. But sometimes those letters contain information that directly protects your income. In other words, a few minutes spent reading today could prevent weeks of financial difficulty later. Before we finish, I want to leave you with one final thought. August isn't necessarily a month of dramatic changes for every pensioner. For many people, life will continue exactly as normal. Payments will arrive. Benefits will continue. Nothing unusual will happen. But for others, one small detail, a different payment date, an assessment letter, a pension credit entitlement, or a retirement age calculation could make a genuine difference to their finances. That's why staying informed matters. Not because every headline affects you personally, but because eventually one of them will. And when that day comes, you'll already understand what action needs to be taken instead of scrambling for answers after the fact. In just a moment, let's quickly recap all 7 August changes together so you know exactly what to check after this video ends, and I'll also share one simple habit that many financially prepared pensioners use every month to avoid missing important DWP updates. So, before we finish today's video, let's bring everything together with one simple recap, because there was a lot of information to take in. Number 1. The state pension age is now beginning its gradual move from 66 to 67 for people affected by the scheduled timetable. If you're already receiving your state pension, this doesn't change your current payments. But if you're approaching retirement, don't rely on assumptions. Check your own state pension age using your personal record before making any financial or retirement decisions. Number 2. August includes bank holidays that may change your payment date. If your normal DWP payment falls on one of those bank holidays, you'll usually receive your money on the last working day beforehand. Remember, an earlier payment isn't extra money, it simply needs to last a little longer until your next scheduled payment. Number 3. If you're still receiving disability living allowance and you receive a letter about reassessment or moving to another benefit, don't ignore it. Open it as soon as possible, read it carefully, and respond before any deadlines. Taking action early is always easier than trying to fix problems after payments have been interrupted. Number 4. If you're receiving personal independence payment and you're planning a longer trip abroad this summer, take a few minutes to check the current travel rules before you leave. Understanding those rules beforehand could prevent unnecessary delays or complications with your benefit. Number 5. If you receive pension credit and you care for someone, you may qualify for additional financial support through the Carers Addition. Many eligible pensioners never realize this extra help exists. It's worth reviewing your circumstances or speaking with the DWP if you're unsure. Number 6. Don't automatically assume you earn too much for pension credit. Every year, thousands of pensioners miss out simply because they never check. Even if you're only slightly uncertain, it's worth finding out because qualifying can unlock additional forms of support far beyond the weekly payment itself. And finally, if you're still receiving one of the remaining legacy benefits, pay close attention to any correspondence from the DWP during the coming weeks. Missing a migration notice or deadline could delay future payments, while responding promptly helps ensure a much smoother transition. When you look at these 7 changes together, there's one clear message. Most of them aren't about dramatic new benefits or unexpected bonus payments. They're about being informed, knowing your payment dates, reading your letters, checking your entitlement, understanding the rules before they affect you. The pension system can sometimes feel complicated, and that's completely understandable. Rules change, payment schedules move, eligibility criteria are updated, and it can be difficult to keep track of everything, especially when you're simply trying to enjoy retirement and manage everyday life. That's exactly why staying informed is one of the best financial habits you can develop. Even spending just a few minutes each month checking official updates can save you from unnecessary stress later. It can help you avoid missed deadlines. It can help you identify benefits you may qualify for. And perhaps most importantly, it gives you confidence that you're making decisions based on accurate information rather than rumors or social media speculation. Unfortunately, every month we see misleading headlines claiming that everyone is getting huge new payments, surprise bonuses, or secret DWP schemes that simply don't exist. Those stories spread quickly because everyone hopes they're true. But acting on incorrect information can lead to disappointment, confusion, and sometimes costly mistakes. That's why it's always better to rely on verified information and understand exactly how each announcement applies to your own personal circumstances. Remember, not every DWP update affects every pensioner. Some changes only apply to people reaching retirement age. Others only affect disability benefits. Some relate to pension credit. Others concern payment schedules. The important thing is identifying which updates actually apply to you. If today's video has helped you understand these August 2026 changes more clearly, then I'm really glad you spent this time with me. My goal is always to explain these updates in plain English, without confusing jargon or unnecessary complexity, so that you can feel more confident about your finances and your benefits. If you found this information useful, I'd love to hear from you in the comments. Have you already noticed a change to one of your payment dates? Have you recently checked whether you're eligible for pension credit? Or are you one of the many viewers approaching retirement and keeping a close eye on the state pension age changes? Sharing your experience may help someone else watching this video who has the very same question. And if you know a friend, neighbor, parent, or family member who receives a state pension or DWP benefits, consider sharing this video with them as well. Sometimes one simple conversation can help someone discover support they never knew they were entitled to. Finally, if you haven't already, make sure you're subscribed to the channel because throughout the year I'll continue bringing you the latest DWP updates, state pension news, payment schedules, pension credit information, and any important government announcements that could affect your income or retirement planning. Thank you so much for watching. Thank you for spending part of your day with me, and as always, take care of yourself, stay informed, and I'll see you in the next video.